If you want to build wealth in the stock market, you've likely come across two of the most popular ETFs in the world, VOO and QQQM. On one side you have the S&P 500, a gold standard of investing. On the other, the NASDAQ 100, the powerhouse of technology and innovation. Both have made investors incredibly wealthy over the last decade, but they are not the same. In 2026, the economic landscape is shifting with the rise of artificial intelligence, changing interest rates, and global volatility. Choosing the right one for your portfolio has never been more critical. Should you play it safe with the 500 largest companies in America? Or should you bet big on the tech giants that are shaping our future? Today, we are doing a deep dive comparison into VOO versus QQQM. We will look at their holdings, their historical performance, their fees, and most importantly, which one you should buy depending on your goals. Let's start with the basics. VOO is the Vanguard S&P 500 ETF. When you buy VOO, you are essentially buying a slice of the 500 largest publicly traded companies in the United States. It represents about 80% of the total US stock market value. It is diversified across every sector: healthcare, finance, consumer goods, and energy. It is the definition of stability. On the other hand, we have QQQM. This is the Invesco NASDAQ 100 ETF. It tracks the 100 largest non-financial companies listed on the NASDAQ. Now, you might have heard of QQQ, which is the older, more famous version. But for long-term investors, QQQM is superior because it has a lower expense ratio for the exact same holdings. QQQM is heavily weighted toward technology, communication services, and consumer discretionary. It's where the big tech giants live. Let's talk about the holdings, because this is where the biggest difference lies. While both ETFs own companies like Apple, Microsoft, Amazon, and Nvidia, the concentration is very different. In VOO, these top tech names make up about 25 to 30% of the portfolio. In QQQM, those same names can account for nearly 50% of the entire fund. This means if tech stocks soar, QQQM will leave VOO in the dust. But if the tech bubble bursts or the sector faces heavy regulation, QQQM will crash much harder than VOO. Historically, the NASDAQ 100 has outperformed the S&P 500 over the last 10 years, largely thanks to the unprecedented growth of software and AI. However, past performance is not a guarantee of future results. The NASDAQ is much more volatile. It has higher highs, but also much deeper lows. VOO offers a smoother ride. It pays a higher dividend yield, usually around 1.3 to 1.5%, whereas QQQM pays a very small dividend, because tech companies prefer to reinvest their profits into growth. Now, let's look at the costs. Fees are the silent killers of wealth. VOO has an expense ratio of 0.03%. That is incredibly cheap. QQQM has an expense ratio of 0.15%. While QQQM is more expensive than VOO, it is significantly cheaper than the original QQQ, which sits at 0.20%. For every $10,000 invested, you are only paying a few dollars a year in fees for either fund. So cost shouldn't be your deciding factor, it should be. So, which one should you choose for 2026? It comes down to your age and your risk tolerance. If you are a younger investor with 20 or 30 years ahead of you, QQQM's tilt toward innovation and AI might provide the higher returns you're looking for, provided you can stomach the volatility. If you are closer to retirement or prefer a set-it-and-forget-it approach that covers the entire US economy including banks, oil companies, and retail, VOO is the undisputed king. But here is a pro tip. You don't actually have to choose just one. Many successful investors use a core and satellite strategy. They keep 80% of their money in VOO for stability, and put 20% into QQQM to capture that extra growth potential. This gives you the best of both worlds. In conclusion, VOO is for the investor who wants to own the market. QQQM is for the investor who wants to beat the market. Both are excellent choices that will likely outperform any high-fee mutual fund your bank tries to sell you. If you found this comparison helpful, please hit the like button and subscribe for more ETF battles. What's your pick for 2026? Are you Team VOO or Team QQQM? Let me know in the comments below. I read every single one. Thanks for watching, and I'll see you in the next video.